What if you could wake up every morning knowing your money is working for you? Instead of counting coins in your pocket, you'd hear the satisfying notification of dividends landing in your account. Financial freedom doesn't have to be a distant dream. It's achievable, and today I'm going to show you exactly how. While some retirees consider reverse mortgages or downsizing, there's a powerful strategy many overlook: living off investment dividends. And I'm going to reveal 3 proven ways to generate $2,900 every single month. Understanding your numbers. Here's the key question: how much do you actually need to invest? It depends on your lifestyle. The average American spends around $67,000 annually, but your number might be different. The beauty of dividend investing is that you can create a steady income stream without ever touching your principal, like having a money tree that keeps producing. For this video, we'll use a target of $2,900 per month, which equals $35,000 per year. Let me introduce you to John, and we'll map out his journey together. What are dividends anyway? Think of dividends like this. When you own stock, you're a part owner of that company.
When the company makes a profit, they can either reinvest it or share it with owners. That's you, the shareholder. Dividends can arrive as cash deposits or be automatically reinvested into more shares. Most companies pay them quarterly. Dividend yield is crucial to understand. It measures your earnings compared to the stock price. Here's the simple formula: annual dividends divided by stock price equals dividend yield. Example: if John buys a $100 stock that pays $10 annually in dividends, his yield is 10%. The magic? John earns regular income without selling his shares. His investment stays intact while generating cash flow. Strategy number 1: covered call ETFs. This is one of the fastest paths to dividend income. How it works? These ETFs invest in stocks and sell call options on those same stocks, creating 2 income streams: stock appreciation and option premiums paid as dividends. Top performers: XYLD, 11.83% yield; QYLD, 11.82% yield; JEPI, 11.81% yield. The math for John. To earn $35,000 annually, John needs to invest between $280,000 and $310,000 in covered call ETFs. Compare that to traditional dividend stocks requiring nearly $2 million for the same income. This is a game changer.
The trade-off? Higher yields come with risks. Options can expire worthless, and stock prices can drop. But for consistent passive income, this strategy is hard to beat. Strategy number 2: high-yield REITs. Real estate investment trusts let you invest in property portfolios without buying buildings yourself. REITs own malls, offices, apartments, and more, then share rental income with investors. Top high-yield options: Two Harbors Investment Corp., 20.3% yield; Brandywine Realty Trust, 19.9% yield; Orchid Island Capital, 19.4% yield. REITs have historically returned 10.8% annually over 20 years. Solid performance with steady income. The math for John. With an average 10.8% yield, John needs approximately $320,000 invested to hit his $35,000 annual target. Pro strategy: invest consistently each week, reinvest dividends, and watch compound growth work its magic. John could reach financial independence in 5 to 7 years with discipline. Bonus perk: unlike most stocks that pay quarterly, many REITs pay monthly dividends, perfect for covering regular expenses. The risk: REIT income fluctuates with occupancy rates and economic conditions. During downturns, they can be volatile.
Strategy number 3: dividend aristocrats. These are the blue chip elite, S&P 500 companies that have increased dividends for at least 25 consecutive years. Top examples: 3M, Leggett & Platt, Walgreens Boots Alliance. Average yield around 7%. The math for John. At 7% yield, John needs $500,000 invested to generate $2,900 monthly. That's significantly more than the other strategies, but here's why it matters: reliability. Why dividend aristocrats stand out? 25+ years of consecutive dividend increases. Well-established, financially stable companies perform better during economic downturns, lower risk of being acquired, consistent profit generation. Smart approach. Diversify across multiple dividend aristocrats to spread risk while enjoying predictable income growth year after year. Final thoughts? Let's recap the investment needed for each strategy to earn $2,900 monthly. Covered call ETFs, $280,000 to $310,000. High-yield REITs, $320,000. Dividend aristocrats, $500,000. Each strategy has different risk-reward profiles. The key is choosing what aligns with your financial situation, risk tolerance, and timeline. Remember, your number might be different. Maybe you can live comfortably on less than $35,000 annually, or perhaps you need more. That's okay. Adjust these strategies to fit your goals. The important thing is to start. Whether you're building toward these numbers through consistent investing or already have capital to deploy, dividend income can transform your financial future. Want to dive deeper? Check out the video on screen about the top monthly dividend ETFs to accelerate your income goals even faster. If you found this helpful, smash that like button, subscribe for more wealth building strategies, and drop a comment telling me which strategy you're most excited about. See you in the next one.